Good morning, welcome to Catex TV. My name is Frank Fortunato. Today is Tuesday, October 23rd, 2012. The American presidential election is 2 weeks from today. Last evening was the final debate between President Obama and former Massachusetts Governor Mitt Romney. Big news in the reinsurance brokerage world. Cooper Gay, Sweat & Crawford, the London independent broker with Toby Esser as its CEO, apparently has sold 55% of itself to Lightyear Capital. The purchase is going to come from the sale of existing shares from the current shareholders, as well as a substantial investment in Cooper Gay's balance sheet. The investment's expected to be completed at the end of Q4 this year. Terms of the deal were not disclosed. Toby Esser is staying on as the CEO. He says, "We are confident that Lightyear is the right partner and shares the same vision for the next stage of our growth." He said further that we expect now to have further acquisitions in the very near future as a result of this infusion. For its part, Lightyear's chairman, Donald Marin, who is a former Payne Webber executive, said that Cooper Gay is a leader in this field, possesses strong differentiation, and we've been very impressed by Esser and the entire management team there. Lightyear already holds a stake in Antares Underwriting, Flagstone Re, and Houston International Insurance. Well, this is an amazing story. In Italy yesterday, 7 prominent Italian earthquake experts were convicted of manslaughter and sentenced to 6 years in prison for failing to give adequate warning to the residents of a seismically active area in the months preceding an earthquake that killed more than 300 people. Speaking in a hushed courtroom in the city of L'Aquila, where the earthquake was centered, the judge read a long list of the names of those who died or had been injured before he handed down the sentences. The defendants said they would appeal the decision. They're also going to have to pay over $10 million in court costs. The 7 scientists, most of them seismologists and geologists, were members of the Italian National Commission for the Forecast and Prevention of Major Risks. They had met shortly before the quake struck after weeks of frequent small tremors, but did not issue a safety warning. The verdicts have jolted the international scientific community. It's going to be very unlikely now if you can find a seismologist willing to give any prediction whatsoever. Tom Bolt, the performance director of Lloyd's, is in Baden-Baden this week with just about everybody else. He made some news today in the Insurance Day. He said the casualty business remains a central area of concern for Lloyd's performance. He says as the economic crisis is coming to an end, the lull in claims activity in casualty business is also coming to an end. Bolt said, "We always worry about casualty. Even when people are doing the right thing, we worry about it. It's a particularly worry right now because although it's not exclusively the line that responds to investment income, it's the one that shows it the most." Bolt said that the lull in casualty claims that became apparent in the financial crisis has now come to an end. He said, "Well, there may have been something related to the economic crisis that caused claims frequency in the U.S. to be down. It looks to us like it's back up." Bolt's message to Lloyd's participants writing casualty business is, make sure you understand what claims inflation is. Make sure you understand what you'll be able to earn on the money you get in the premium. From your lips, Tom Bolt, to God's ears. In southern Taiwan, earlier today, a tragedy unfolded. A fire broke out at a hospital, killing at least 12 people and injuring about 60 others. The blaze started at the Xinying Hospital in the southern city of Tainan on the island of Taiwan. The facility is mainly a nursing home facility and it houses mainly bed-bound patients. The UK Financial Services Authority will extend the internal model approval process for insurers to calculate their Solvency II capital requirements now until the end of 2015. This is in light of the effective postponement of the supposed 2014 Solvency II go-live date for the European directive. And Richard Banks wrote in Insurance Day today that reinsurers are hoping that the provisions of Solvency II will strip out a lot of the naive capacity that is maintaining the downward pressure on reinsurance rates. According to Mark Beckers, the head of Benfield Analytics, Aon Benfield Analytics in Europe and the Middle East and Africa, he said there's no doubt that there remains naive capacity in the reinsurance sector. He believes it would be a real feather in Solvency II's cap if the regulation can drive that capacity out. Becker went on to say, if we can get the stupid capacity out of the market, people who are willing to provide insurance policies at below what they should be because of embedded options in the life side or because of frequency and severity risk on the non-life side, that would really help those players who understand the risks they're taking. Beckers went on to say that any delay to the official adoption of Solvency II is irrelevant because insurers understand that they're going to have to deal with those provisions anyway. And earlier today, a Super Puma helicopter went down to the North Sea. The Super Pumas are used to ferry drill personnel and equipment out to the oil rigs in the North Sea. And there have been some concerns expressed over their safety. In April 2009, one went down and 19 people were killed. Fortunately, in this instance, all aboard were rescued. Again, the presidential debates are concluded. We have 2 more weeks until the election. And last night, the American Baseball World Series has now been finalized. The San Francisco Giants will host the Detroit Tigers tomorrow night. That's the news for today. If we have any breaking news, we'll come back and tell you.